So this video is about change in structure direction. This is otherwise known as a CISD, and this is one of the entry triggers that I use to take entries off of my levels. If you've seen my other videos, you know that I use the fib a lot. I also use standard deviation, along with key opens and other PD arrays that align. But how do I actually take trades off of those levels without just setting a limit order? That is where a CISD comes in. So a CISD is a two-candle formation. I'll go ahead over here and find an example to show you. So right here, this candle right here is the last bearish candle in this move. The very next candle engulfs the high of the body, making these two candles a CISD or a change in structure direction. If we go ahead and draw out the high of this candle here, I would set a limit order on this level, and this would be my entry. So for example, if I wanted price to tap this level and I wanted to wait for a rejection off of it, I would wait for this CISD to happen, and then I would limit order this line right here. So in order to show you a trade example, say we wanted to draw the fib on this leg right here and we were expecting a bearish move. Usually when we take a trade off of the fib, you'll just limit order a level like 0.705. But as you can see, once we tapped it, we did get a reaction, but this wasn't the full move. And that's why we wait for entry triggers. So we went here, we tapped into it, we rejected it, but we didn't get the full move. So what we do is we wait until we get a CISD off of the level. So in this case, price went all the way up to 0.79, but it gave this CISD right here. This right here is the two candle formation I was talking about. And if you wanted to take a trade off of 0.79 and wait for a CISD, this is how you would take it. Right here, you can see that the second candle fully engulfed the bottom of the last candle of this move. We then draw out this line, set our limit order on it. I always use a 10-point stop loss, so we tap into this and it flushes all the way down, giving just about 37.7 RR if we were to take this off of this fib level. CISDs are shown pretty much everywhere. I'll go ahead and draw out a few for you so you guys can kind of understand how to spot it. So these two are CISDs. If I go down here, this candle right here is also a CISD. I mean, you could call this a CISD if it was tapping into a level you wanted to take a trade off of. If I go over here, you can see this is a CISD, and you can see it's the two candle formation. It's the last candle of the move, which is this one right here, and an engulfing candle on the very next one. If the very next candle doesn't engulf it and it closes just beneath this, we're going to need another bearish candle to reset the CISD and then an engulfing candle after. This is always a two candle formation. It can't just be a candle down and then a bunch of candles that at some point break the high. That doesn't count. We have to tap into the level, and the very next candle has to close above the high of the body, proving that we want to react off of the level and move higher. For example, right here, if we wanted to tap into a level here and take a trade off of it, you can see this candle gives the CISD. The third candle right here taps back into it, and then we move higher. And you can see that price taps into this CISD level later on and reacts off of it a second time. I'm going to go look for one standard deviation plus CISD entry so I could show you guys how to use it in a trading model. Right here, let's say this is the manipulation leg we're going to draw our standard deviation off of. We'll go ahead and turn this into standard deviation, and we tap into minus 2.5 right here. Now, instead of us limit ordering -1, -2, or -3, what we're going to do is wait for a level to be tapped and get a CISD off of it. If you look very closely, this candle right here actually gives a CISD entry, because this white candle right here, the last bullish candle, was engulfed by the very next candle. And remember, we draw out the body like this, and this would be our entry. In this scenario right here, if you had anything over a 12-point stop loss, you would not have been stopped out, and you would have gotten a very, very, very good trade. I mean, markets closed over here, but it ran 15 RR. Well, that concludes my CISD, or my change in structure direction video, explaining how I use entry triggers to up my win rate when taking level-based trades. If you guys want some more free value and even some trades that I take in real time signaled to my Discord, go to discord.gg/halls or the first link in the description.